Hello, traders. It's Thursday, May 1st, 2014, 8 a.m. Chicago time. First day of the month. Thanks for joining me. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. So we're looking at the overnight news. Let's start with the FOMC. In case some of you missed it, the FOMC continues to taper $10 billion as expected. A few major changes in the statement. Growth, they're saying growth is picking up after slowing sharply during the winter period due partly to the weather. Household spending appears to be rising more quickly with business investment edging down. This was a unanimous vote. Overall, the market's reaction is to make new highs. So the Fed is basically putting in another vote that the economy's recovering nicely, and the market agrees with it according to the reaction we saw. The ES popped down to 70 and a quarter and 77.50, and then it continued to push higher. It didn't get to our target from yesterday's trader bite or the day before. At 81.50, it stopped 4 ticks short or 5 ticks short, but overall pretty bullish. I think the DJI made new highs on the year. Overnight, UK April manufacturing PMI beats. They got 57.3 versus 55.4. China PMI manufacturing a small miss, 50.4 versus 50.5. A release shows that China continues to create jobs despite a slowing economy. That's really the big stuff for today. Of course, we got initial claims today at 344,000 versus 320,000 expected, so slightly worse. And then continuing claims at 2.771 million versus 2.7 million, also slightly worse. U.S. personal income came in at 0.5 versus expected 0.4, slightly better. U.S. PCE deflator 0.2 in line. And then looking ahead, we have U.S. manufacturing PMI final at 8:45, 15 minutes after the cash open, expecting 55.4. So that's the first release today, 8:45 in the morning. Construction spending at 9 comes in expected at 0.5, expected at 0.5%. And an ISM manufacturing expected at 54.2. Construction spending, ISM manufacturing are medium tier numbers. They could cause a reaction. And then, of course, ISM prices paid also at 9 o'clock Central at 59.5. Then at 9:30 we have EIA natural gas for that for those who trade the natty. Other than that, it doesn't have an effect on the market. And of course, Fed's Yellen. Speaking to community bankers currently. Not seeing anything on my news feed on Yellen. It says Fed's Yellen does not speak on monetary policy or outlook for the economy. So this is a non-event. I thought that we would get something out of this. And then later on at 12:30 we have BOE speaker Cunliffe in London. So that's it for the event schedule for today. Let's look at the technical picture. Let's start with the recent action overnight. So yesterday, pretty squarey or bulky profile. No real consensus on value based on yesterday's action. You can see the Fed reaction right here, 77.50 to 70 and a quarter, and then the market started edging up, putting in a high at 79.5, pulling back to the mid almost exactly at 73, then pushing back to 80 quarter and finishing the day at 78.75 on the closing print. And then the overnight basically just pushed back to the 80 quarter. Pushed back to the 80 quarter, tested the other side to 76 and a quarter, and then pushed up to 80.50, and then essentially fell from there. But the overnight volume is very, very low. It is, I believe, it's May Day today. It's a holiday in Europe. It's a holiday in Europe, and so we have very, very little participation overnight. The euro is completely sideways in the overnight session with a downward skew. Nothing going on there. So 67,000 contracts traded overnight on a balance profile says pretty much you know, go do something else during the European session and the Asian session. So we have a balanced profile, very little volume, very hard to tell what to expect here. The market's just basically snaking around yesterday's close. We have a double top. That's what these little arrows at the top are saying. We have a double top that has formed, and we'll see how that holds up in a day session. Looking at the action from yesterday versus the day before, we were not able to move the point of control out of the prior day's action. So the point of control of Wednesday was inside of the value area of Tuesday, showing a kind of a balancy type of mood to the market. The market's run up appears to be slowing down. I'll show you another indication of that. The point of control did not move up. We didn't trade enough to move it up to 78, but it's a close shot. Those two prices. Let's see what the difference is. Those two prices were not too far off. 44,611 versus 43,167. So about 1,000 contract difference. But overall, this does not inspire the idea that yesterday was pushing value higher. Yes, prices, the low and the high on the day session were higher highs, higher lows, but value was pretty much in line. Value low is in line with Tuesday's session. Value high is higher. We had more volume on a stocky profile, as I said, so it is slightly higher, but overall not a kind of an inspiring high. Show you why. An additional item that displays how this is reacting. So we have the high of 82 here, 82.50 on the overnight, and then we put in a delta of negative 519 or 520,000 basically. We pull all the way back, put in a delta of negative 600,000, but then we push from here. You know, at the 71.75, the delta is negative 550,000, but we pushed to 75, 1875, which was a higher high, and the delta is only slightly higher, 6,000 contracts higher. We push again to 80.25 yesterday, but the delta is actually lower. Not sure if you see that clearly, but you can see here that, you know, price action is moving higher. The green shaded area is the day session. The other color is the overnight session. You can see on the day session we're making higher highs here, 75.25, 80.25, but the delta is just not participating, and that was yesterday. Despite the higher volume, there's really no urgency to buyers, and it's just seen they're exhausted. The market continues to move higher. Even though the delta doesn't move higher, the market can continue to move higher. Why? How is that possible? How does the market move higher without buyers lifting the offer, which gives us a positive delta? The reason it can happen is because the delta only measures how much was traded on the offer versus how much traded on the bid. So the volume delta is the actual number of contracts that traded on the offer minus the actual number of contracts that traded on the bid. It's measuring aggressiveness. In order for the market to uptick, somebody has to be aggressive enough to believe that the market will uptick an additional tick at least. So if I'm going to reach out right now and buy 77.25, then I expect the market to go 77.50 bid. Otherwise, I can't make money. So it shows aggressiveness from the buyers. And the reason the delta can stay negative or flat while price moves up is it could show that the offers are actually canceling. So price can move up. Imagine if right now you wiped away the next 5 prices. You've wiped away every offer from 1877 and a quarter in the market all the way to 1879.50, and there's a one lot at 79.75. Price will show that we printed 1879.75 on one delta, one volume delta. So the delta does not move, but price has moved quite a bit. So this could be showing that price is moving up on sellers backing off more so than buyers aggressively lifting price, and that has been the case for some time now. For a couple months, it seems as we move higher, it's more about sellers backing away, seeking higher prices to sell into, more so than buyers actually reaching out and lifting the market aggressively, boom, 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 like they did back at 1739, basically 100 points ago, 150 points ago. The buyers were much more aggressive, and that's what this chart shows. It's showing us where buyers came in and were aggressive. So you could see the delta moving up with price, and that's what we expect. We expect price to move up on higher demand versus price moving up on less supply. So that's the difference when you're in that chart. That's why it's important. Looking at the market profile, we still have 1881.50 lingering out there. We stopped about 5 ticks short. We're about 4 ticks short from the overnight high. The expectation this morning, given the action that we see overnight, and because there was really not much action, I expect that early on the market, is likely to be pretty choppy. We'll wait for the manufacturing PMI 15 minutes in. And then, of course, we have construction spending and ISM manufacturing. At that point, the market will likely take a tone and direction, and it'll be easier to see. But I'm going to tell you that on the open, it'll be anybody's guess. The expectation is for this to push towards yesterday's close first, but I expect this to push towards yesterday's close, find sellers, and then start to move down towards 73.50, more so than pushing lower, taking the overnight low, and pushing lower towards the overnight low, and then turning and then pushing towards the 81.50. I expect today to be a resting day. Again, it's a holiday in Europe, so not much action is expected. I expect this to be an outside-in market, meaning mean reversion, choppy, trading extremes type of day as opposed to a breakout day. That's what I'm looking for. I hope the market shows me wrong, because it creates we have more opportunity if we do have a break one way or another, because we're looking, as traders, we're looking for price volatility in order to take opportunities to make or lose money. Those opportunities exist on the changes of prices versus a market that's just chopping around in a 5-tick range. So be patient today. There's not much that I see on the calendar past the 9 o'clock number, 9 o'clock Central, the construction spending ISM. So it's anybody's guess. I'm seeing pretty weak pushes towards this 81.50, so I'm thinking that with yesterday's range being 13.75 points and a pretty fat, boxy kind of non-consensus-based profile value area, I expect that we're likely to chop in this zone today. So the overnight low is more likely to break than the overnight high. That's what I'm looking at for today. Hopefully that's useful to you. As always, just don't stick your neck out unless you feel like you're more likely to get your target or a scale than a stop. When we get bored as traders, we're looking for action, especially online traders. It's a little bit easier in a trading room or in a prop room where there's always something going on and you can feed off of others. But online traders have a different dynamic in that you're sitting there, you're waiting for something to happen, you feel the urgency to make something of your time. You feel like you need to do something while you're sitting there, and the need to do something while you're sitting there is likely to lead you into pretty poor selection of trades. The objective is always the same. Identify a bias, have a plan, identify a bias based on what the market confirms or does not confirm, find a spot you can lean against, put your trade on, let the market tell you what your fate is on that particular trade. Every trade is just one trade. It does not make you, it does not break you unless you have no risk. Okay, so it's like filling a bucket with water, one drop at a time. Each drop is insignificant, but over time the bucket gets full. So you're looking for your edge to show up in a large sample. Don't judge yourself based on today's performance. Being that it's the first day of the month, it's really, really, really important for you to sit down, pull in all your trades or fills, and do your statistics. Know your expectancy, know your win percentage, know what your max drawdown is, know your duration for your winning trades, know your duration for your losing trades, know your duration for your scratch trades. Find out what days you did well on. If you have those statistics, you can zero in on those days, go back to the chart, and try to identify what kinds of days work for you and what kinds of days do not. Every week and every month, and the end of every month, present a significant opportunity to go back and look at what is working for you and what's not. At stage 5, we push people to journal. We've been using Evernote as a tool to journal all day. I've posted those on the Twitter feed. And it's just important to go back to those journals for the month and kind of read through and look at the days where you did well and felt good and the days where you did not. Compare them to the chart and figure out what it is that works for you. Until you know that, it's hard to make progress, and when the time comes for you to push your leverage or to push your risk to maximize the return on your investment. There's always risk of loss, and of course this is not for all investors, but that's the best advice I can give you for the beginning of the month. Good luck.